DM, good morning. Welcome to the Milk Road Show, the daily crypto show that made the cut, just like that last team sneaking into March Madness. I'm your host, Jay Hamilton. It's Saturday, March the 15th, which means we're back with the Milk Road Pro research team because it's Saturday. That's right. We got Kyle and Martin in the house. Adrian was traveling this week, so he was out. Now, today's episode is not so much about the markets. If you want our takes on the markets this right now, why it's so red, where's the bottom, how do you position your portfolio, should you be buying, should you be selling, when will we recover, what does the next 3, 6, and 12 months look like? Go back and listen to Monday, Tuesday, Wednesday episodes from this week where we break down a really well thought out view on, are we in a bull? Are we in a bear? And where do we go from here? Now, today's episode with the Milk Road Pro Research team is all about a new thesis that they are cooking up about where's the next big investment opportunity in crypto. Over the past few years, the big opportunity has been in L1s, in block space. But now we're at a point where we have a lot of block space, we have a lot of L1s, there's a lot of competition, and that trade is not quite as good as it used to be. So the question is, what next? The thought that Martin is going to share with you, his thesis is data availability. If you don't know what data availability is and why that matters and why it's such a great opportunity, that's why you got to listen to this episode, because Martin is really going to explain his thesis for why data availability could be the next big opportunity. Now, obviously, Ethereum and Celestia are two of the leaders in data availability right now. And we're going to talk about that. And we'll also talk about a few others that you could invest in if you want to gain some exposure to data availability, which we really believe in. Also, if you guys want to check out more, if you're really excited about Celestia, which we talk a lot about in this episode, check out a recent Milk Road Pro report. We'll link to it in the show notes that dives deep into our thesis on Celestia and how to invest in it if you want to add some of that to your portfolio. Now, today's episode is brought to you by Definitive Advanced Trading on every chain. It's also brought to you by Coinshift, powering top crypto treasuries with their yield-bearing stablecoin CSUSDL. Without further ado, let's hear from the boys at Milk Road Pro.
Welcome back to another episode of Milk Road Pro Research Meeting. It's always fun to come in here and do this so that everyone gets to hear our discussions. We are without Adrian today. He is, I think, in Thailand. He's traveling around the world right now, so he's kind of on the move, but that's cool. We've got Jay, we've got Martin, and myself here today. We are going to discuss a big thesis we have that I think is going to shake crypto markets and really change I don't know if I want to call it narrative, but the outlook of I think where a lot of capital is going to go over the coming years. And just to tease that real quick, for the last, let's say, 15 years in blockchains, we've focused on block space, and there's been a lot of coverage around block space and investment around block space is the next big thing. And we're kind of flipping that and actually thinking maybe block space it's not over by any means, but blob space or data availability is actually the next big thing in this space. And so we're going to cover, what the hell does that even mean and why? But this is a big thesis that we're sort of like continuing to tinker with and build out here at Milk Road Pro. So we'll discuss that, and then we just want to discuss some of the things around revenue in DApps in crypto. Obviously, there's been a fall off a cliff in terms of DEX volumes and things like that, and so we just want to comment on what we're seeing in terms of revenues on chain and also Aave and its token buybacks. We've talked a lot about this whole token buybacks thing. We're starting to see it now. Aave had their big proposal, performed quite well over the last little bit, so we'll discuss in some of our thoughts around what's going there as well. But let's get started first with the block space / blob space thesis here. Let me first give a little bit of context, and then Martin, I'll let you sort of walk us through what you're thinking. I'm just going to share screen to start. Which one is it? Not that one. That's one. Okay. So first, for those watching right now, I highly recommend you actually watch the screen, because I'm going to be sharing a few charts that are going to help make this make sense. So for the last 10, 15 years, everything's been all about block space, right? Bitcoin started it, then Ethereum, and it was all about, the fees that are generated from block space. And, with Ethereum, that became very, very expensive. We had insane revenues over the last few years through Ethereum. Now we're starting to see that block space is getting, let's say, commoditized, right? It's going down in value because everyone's trying to make their blockchains cheaper. Ethereum's doing it by launching L2s, saying, hey, go trade and go do your things on Base or on Optimism, et cetera, instead, because it's much, much, much cheaper, right? And so the cost of execution is going down a lot. Used to be like $5, $10, $20 to trade on Ethereum. Now on L2s, it's like sub 1 penny. And even on Ethereum, it's been like less than $1 over the last little while, which has been actually quite nice. And then you also have integrated chains like Solana and Aptos and Sui and all these that are trying to do it all on one chain. And again, very cheap to trade on there. And so the cost to execute on chain to use block space is going down and down and down. And we think that trend doesn't stop. It's actually like everyone's in a race to make their blockchains even cheaper, even faster. And so that's not going to stop. But there's one thing that's needed every time you do anything on chain, and that is to post the data of the transaction. Whether you're, minting an NFT or trading an NFT or you're trading a token, whatever, there is data that needs to be stored somewhere so that someone can go back and see that this thing actually happened, right? That's called data availability. In the Ethereum world, that's called blob space, right? And basically what we think is blob space and data availability is already, let's call it, as cheap as it can possibly be, and probably only going to go up from here. Whereas execution and things around block space is only going to go down from here. And so, as Martin will talk about, we think that most apps are actually going to move into their own chains, and they're all going to need to post data somewhere. And so we think that there's going to be this ballooning in the industry around this data availability, and we think that's the next big opportunity in blockchain. So that's why you can see on this chart here, kind of block space has been going up and up and up in terms of its use. And over time, we're starting to get more and more data availability or blob space. Again, these are the same terms, just used differently in different ecosystems. And we're seeing that start to go up. And we think that's going to hit an inflection point very, very soon as we get this world that we've talked about for forever of millions of L1s or L2s, millions of chains, let's call it. And so that's when we think blob space is really going to start to take off. So that's the kind of general overall idea here. Martin, why don't you walk us through kind of the more details and like why you think this is playing out and why you think this inflection point is sort of coming through?
Yeah, sure. Um, Maybe let's look already what's happening in the markets, and we can look at the recent winners, which is obviously Base from Coinbase, which is layer two, and we can kind of zoom in on their strategy. They have big exchange, a lot of users, and yet they decided to launch their own layer two because they believe that the world is going to be on chain at some point, and like we are just starting to see the first signs of it. And so they created their own chain, and they could kind of sort of integrate with Ethereum mainnet or Solana or something, but then like all the activity that they are bringing on Solana, Ethereum mainnet, whatever, like all the fees that the users are paying there, it would go to other chains, but not Base. So they were like, okay, that's not what we want to do because we have the users. So we want to have our own share of that activity that's happening there. Therefore, they have financial incentives to go out there and launch their own chains and only outsource the services that they are not able to kind of build in-house. So that's something like you have talked about, GA, settlement. Those are the things that you cannot build in the house. You need to kind of outsource these services elsewhere. And most of the chains today use Ethereum for these kind of services. And that's just one chain. The one like probably the best example out of them all. And now like what everyone else is going to do, like Revolut and all the fintechs and neobanks and like all successful Web2 applications, they're probably gonna do similar thing because Base is today making around 90 or maybe 100 million per year just by like launching this chain and making the fees from execution and priority fees. So I think that's the path for everyone else, and like everyone will just do the same thing.
Let
And
me
those,
let me dive into there just a little bit to help nail that point a little bit further. So you see that Coinbase has an incentive to launch their own chain rather than to build on top of Ethereum, right, or Solana or whatever. And um, if we look at the trend right now, what are most apps and most businesses doing. Kraken also had an opportunity to either build on Ethereum or launch their own chain. They launched their own chain. OKX, Binance, they all are continuing to do this, okay? So that makes sense. Let's look at the most successful apps in crypto. What are they all deciding to do? DYDX was one of the first breakout apps in crypto. And what did it do? It moved, instead of being, it used to be just on Ethereum, it launched its own chain, right? Now, first it launched as an L2, then it launched over on Cosmos, but doesn't matter. Either way, it moved from an app to an app chain. If we look at Uniswap, the most successful app in all of crypto, what has it done recently? It launched Unichain, did it in the form of an L2. If we look at Athena, what are they doing? They're launching Athena Chain. If we look at Maker, what are they doing? They're launching Maker Chain, right? All of the most successful apps so far in this space, they've all gone and said, hey, we don't want to be an app anymore. We want to go and launch our own chain, right? And I think that trend is only going to continue from centralized companies, as we talked about with like Coinbase, or as Martin said, Revolut and Robinhood, let's say. All these guys are going to start to launch. Yes, that might just be an app, or it might be an ecosystem like Base. Either way, it'll be in the form of its own chain. The reason why they can do that is, one, they're incentivized to do it because they can make money on every transaction rather than letting that leak out to other chains. And then two, it's just so much easier now. You couldn't really do this 4 years ago. Like no one was coming in the space and just launching their own chain. But now it's as easy. It's like almost as easy as like launching a smart contract. You can do that just as easy to launch a chain, because Ethereum has a bunch of things that can do it for you, or Celestia has a bunch of things that can do it for you, or there's a bunch of different products out there now where it's actually pretty simple. Like you could launch a chain right now on this podcast in like a couple minutes. Like that's how easy it is now to launch a chain, right? Now, of course, it's not that simple. There are things that matter and you want to like optimize for certain things. Even Santi, who we've had on the podcast a bunch of times, he's launching his own thing where he's buying companies in the TradFi world and he's bringing them on chain. Now he could do that on Solana. He's a big Solana bull, but he decided to launch a subnet on Avalanche, right? Another alternative to Celestia, Ethereum, or whatever. It's again because he wants to control those fees, right? And so I think what we're moving into, and I think one of the big things everyone listening right now needs to wrap their heads around is, we're very used to, okay, these integrated chains, or these big chains that have a bunch of apps on it. And I think the world we're going to is actually just a bunch of chains that are just apps. Now you'll have some general purpose chains like we are used to today, but we're going to have a lot more app chains. Once an app becomes, think of launching an app on Ethereum or Solana like a test net, right? You kind of do that. You see if you can get some users. Once you have sort of some momentum there, then you go and you launch your own chain and you control the fees and you customize it and you can do whatever you want, right? And I think that's the world we're going to. And so there's going to be thousands, probably millions of chains moving forward. Now, will they be L2s? Will they be L1s? Like, we don't know. I think there's going to be a bunch, and there's going to be all of them. There's going to be tons of L2s, as we're already seeing. There's going to be tons of L1s, whether they're using Celestia, whether they're using Cosmos or Avalanche, et cetera, et cetera. So that's the world we're entering. And I think with that view, it'll help you understand the next kind of layer here, which is, when we have a world of millions of chains, where does the value accrue, right? That's the part that I think is really important here, and really is a big part of Martin's thesis here. So Martin, from that understanding, now that we all kind of have that high level view, let's continue on.
If you're only trading on centralized exchanges, then you're not going to make it. The best traders know the alpha is on-chain. Definitive, founded by Coinbase alums, lets you trade any token on Solana, Base, or any chain all in one platform. What makes Definitive different is its advanced order types. You can execute limit, TWAP, and stop loss completely on-chain. Plus, you get the best prices as your order is routed instantly through every DEX and liquidity pool, getting you up to 19 times lower fees. Trusted by funds, whales, and the milkman himself, now you too can trade like a pro. Milk Road listeners get a tasty glass of milk with zero fees on your first 25,000 at milkroad.definitive.fi. Meet CSUSDL, the stablecoin built for institutions and DAOs. Don't just hold basic stablecoins, earn yield, all without compromising security. Backed by regulated real-world assets and secured with institutional-grade risk management by our friends at Stakehouse Financial, put your treasury cash to work, earning native yield and protocol rewards. built by the team behind Coinshift, which is trusted to manage over 1 billion in business treasuries on chain, including Aave, Gitcoin, and hundreds of leading institutions. CYCS USDL is gaining traction at milkroad.com/Coinshift.
Yeah, let me just add a few more comments what you just said. One thing is we can think about layer ones as launchpads. Like I have an idea. For me, it's just super easy to write a code, deploy it on Solana, and see if people like it. If not, I will get feedback. I will get incentives, so I can iterate and improve my product. And until like once I found product market fit and I can just focus on scale, that's fine. I can still do it on Solana. But then at some point, I will have not just the financial incentives we have been talking about until this point, but also I might want to customize like the blockchain I'm using for my specific needs, not like for everyone else. So like it's not just the financial incentives. It's also about like, hey, I by having my own chain, I can have a better product and better user experience. So that's like profitability and then better products. So those are two like the most strongest like reasons why you should do it. And everyone will probably do it. And okay, then if you believe that the future is thousands or millions of chains, then what is going to be the service that they are going to need to use and will pay for? And that market could potentially be in billions, right? And it's DA. Because like execution, every chain will have their own execution fees, and they will like, as we were talking, like Base is going to capture their own execution fees, fine. Then like consensus, which is, you can think of consensus as someone who is managing the ordering of the transaction. So now like Base also get a lot of money by sequencer fees because maybe you want your transactions to be executed like right away. You don't want to wait like 5 seconds. You want just immediate instant confirmation of your transaction. So you don't mind paying like couple cents more on top of your base fee. So but in the future, like you want, this will be default. You will just click and your transaction will be executed. You will not need to pay any extra priority fees or whatever. And for the second reason, when you might consider paying priority fees is when you might want to front run someone else. So like there is a hype around some meme coin and you want to get in like first and get the good price because the person behind like after you, they might get worse price, so you are kind of front running everyone. So we think that this is also going to be not the part where blockchains will make the most money, because the apps will kind of internalize this MAV and these front running actions. So look at what CowSwap is pretty much doing this thing today. Like if you trade on CowSwap, they will just make sure that you are protected against MEV, and then they will kind of distribute MEV to the users as a surplus.
Yeah, let me just clear. So, for those that can't see the screen right now, we have today how the blockchains look like in terms of value. So, when you pay a fee on a blockchain, it goes to 4 different things: settlement, execution, consensus, and DA. As Martin just said, we think consensus is going to go basically collapse to near zero, not zero, but near zero. And that's because, there's protocols and things like CowSwap, for example, that can fix that problem. And it's ultimately what businesses are going to want to do is give the best price to their customers, right? Because that's otherwise customers will go elsewhere. So it's going to become very competitive. If you're the only chain, well, who cares? You can do whatever the heck you want, which is what Ethereum had for many, many, many years, right? Now we're starting to see that the fees are going down everywhere, and that's because there's competition, right? And so consensus is going to go down. Execution fees will go down, except overall it'll go up because there'll be just more and more volume. You're going to have a gajillion transactions instead of what we have right now of like millions. And so ultimately execution will retain value, and then settlement's just very tiny. DA is the thing that's very small right now, again, because there's such a small amount of transactions. But in a world where we start to have whatever gajillions means, I don't know how many zeros that is, but a lot of transactions, then that DA is going to be the thing that is going to start to increase in fees, or at least, again, similar to execution, there'll be tons of volume of that, and so it will generate more revenue. And yeah, I'll see if you have anything more you want to add to make this more simple. Or let's just ask Jay, are we following here, or is there anything else we need to clarify at the moment?
No, following so
Good?
far.
Nice. Good
Yep.
job. Martin, anything else you want to continue on here?
Yeah, DA is the end game for this modularity blockchain future, because like you cannot outsource DA and settlement. Like, Base cannot build their own DA because you need to post those somewhere else. So it's like decentralized in a secure way. So like there are some rumors, right? No rumors. There are actually like really people considering using Base layer 3s, and they will just post these DA data into Amazon Web3 service, which is like we are we are not talking about blockchains anymore. It's just like all these data can be found on some server on Amazon, So we want this to be as secure as possible. And the point for why DA will like scale and explode so dramatically, because DA will pretty much correlate with all the transactions that are happening on the blockchains, because each kind of transactions on blockchain needs a certain number of kind of inputs or data associated with it. So like who is sender, how much money, from which chain to which chain. And like you can compress these data, but there is only a certain like there are only natural limits how much you can compress these kind of information. So like every transactions will be, let's say, about 60 kilobyte, and you cannot compress it anymore. And if we believe there is going to be, millions or thousands chains, and they will all probably generate thousands or millions transactions, then like DA, like today, DA is pretty much nothing, right? It's just a couple millions today. But in that future I'm talking about, it's going to be tens of billions, like just for
Revenue.
DA. Yeah.
Of revenue. And one thing to think about here is, so let's say when there's millions of chains, right? We're already starting to see this play out. There's hundreds of L2s. There's, I don't know how many L1s, but there's so many. And they're all going to do their own execution. They're all going to do their own consensus, but they're all going to need someone for DA. And right now, there's not a lot of competition in DA. There's basically like Ethereum blob space, there's Celestia, and there is Eigen DA. There's some others, but like those are the only three that like really have some solid momentum going. And so in a world where there's going to be so many more transactions and so many more chains, and we know that DA is going to be needed a ton, the demand for DA is so much, but there's only a few providers. And so that is a great opportunity if you can catch that trend. Right? Now the question is, which one's going to win? And obviously we don't know that. It's still early days. I would say blob space probably still has a lot of it, although if you look at market share, technically Celestia is actually winning this. And then I guess, to be fair, Celestia's cost for their DA is what, like 1,000x cheaper than Ethereum DA right now. And so there's definitely a big opportunity here. But ultimately, I think in a world where we're going to see millions of chains, DA is going to be the thing that really matters. There's going to be a lot of revenue generated in DA. And then if you can find and invest in the assets or the protocols that are going to get that revenue, they're going to capture that revenue, I think there's a massive, massive opportunity over the next few years. Because again, investing in block space doesn't really work anymore when you have millions of chains, because you're basically just investing in an app, and they're all going to have a little bit of revenue from block space. But investing in DA is all of these apps are all going to bring DA to the one or few spots, few providers. And right now, again, there's only three.
That's like, can you show the very first chart you shared?
This one here? Yeah.
Yes. What do you think that the inflection point on this chart means? Because there is like one particular thing that, well, you might believe in that future I was just describing, but what's inflection point on this chart?
What needs to happen, you mean?
This
I don't know.
Yes, this inflection point here means today, if I am still going to launch my own chain, I am risking that no one will kind of bridge my assets. I will not get enough users. So that's a pain.
Mhm.
So that's why we haven't seen as
Right.
many app chains today. But that's about to change because like
Right.
pretty soon we will have interoperability and like intercommunication between chains solved. So I I will I will have a green light to go there and create my own chain pretty much, because right now, like, when I'm startup, I don't have users. So I would go and launch on these kind of launch pads, because there is where liquidity exists, where users are, and I don't want to be isolated on my own chain. And the inflection point on this chart means we are getting pretty close to the future where, like, if you launch your own chain and you are using, let's say, Celestia DA, you are automatically interconnected to like everything else that exists in that ecosystem.
Right.
So
Right. That's a good point.
yeah, it all fits together that we are like pretty close to that inflection point where there will be just like so many chains created.
Yeah, because I imagine those listening are like millions of chains. How many networks am I going to have in my MetaMask wallet? And what we're saying here is that DA also is going to fix that, or DA providers through interoperability. And again, it's either Ethereum that's going to figure that out, or it's Celestia that's going to figure that out. And Celestia kind of already has in terms of their tech. They just don't have a million, chains on there adopting it yet. But they're on their way. I mean, I don't know how many at this point, but they're getting a lot of adoption there. And so basically, what we're saying is have an eye for blob space/DA. You should be looking at revenues. You should be looking at who the providers are there, where are the network effects going. Obviously, Ethereum has a lead there, and I think that's one part of what could be exciting for Ethereum in the future if it can do that. The other thing I think is Celestia is a massive opportunity because it is probably the leader in terms of the best product right now for these chains. Now it's still early days, so we don't know who the winner is going to be, but we're quite bullish on what Celestia is doing. And on the potential revenue that Celestia can be driving from this. Should we wrap up there? Any more we want to touch on this thesis?
Let me ask a few questions. So, if this inflection point is a key point in this thesis, how far do you think we are from this inflection point?
Yeah, I think like Celestia will enable that interoperability within their chains this summer. So, but the biggest, the main point, the milestone here will be when Ethereum enables that. So like all layer twos can communicate together and like, yeah, like that's where I think that Celestia stands today. They are front running Ethereum's roadmap. And, just depending when Ethereum is able to deliver the same kind of thing, is Celestia able to get enough people, enough attention, enough users, enough chains to their ecosystems? And if so, will those like existing chains within their ecosystem have any incentives to switch back and go and use Ethereum? So this is something like the market needs to decide, but that's something I'm gonna like follow and monitor closely.
And just for a little bit of context here, this is the chart I just brought up on the screen. Here is the data availability provider market share, which was 100% Ethereum for
Holy
the most
geez.
part in 2023, and Celestia now sits above 90%, and that has just been climbing all basically this year. So it's been a really really big year for Celestia, and a lot of this just has to do with there's just a lot more chains launching. Um, and the thing you got to understand is the data availability on Ethereum is still very slow, very costly, and there's not a lot of it. There's not a lot of supply, which in like base uses up. I don't know what the number is, but close to like 70 or 80% of all the Ethereum DA, like the blob space, right? And they're only continuing to grow. And so soon enough, if Ethereum, now they do have some upgrades coming that's going to fix this, but like if they didn't upgrade in the next like 2 months, base would use all the blob space, which means like there's nothing left for the other L2s, or there is, it just means it's going to get really expensive, right? And so Ethereum needs to really speed up their development and upgrade the L1 to make blob space much cheaper and more supply, which they are doing, and that's coming. There's already a test net for Pectra, I think it's called. So like that's coming, but like, is that going to be enough? Because now you also have Kraken on an L2, and you have all these other L2s that are starting to gain adoption. And so I think there's going to be a point where maybe Ethereum can't scale fast enough for the L2, similar to last cycle. It couldn't scale fast enough for all the transactions that apps had. Now it's going to be this point where it can't scale fast enough for the L2s. Now, that could be a good problem, right? They're going to make a shit ton of revenue from it, probably. There are other benefits to Ethereum's DA in terms of security. That's why a lot of these guys are paying more for it than they are Celestia. But I think there's going to be many that also don't care about that and are happy to go and use Celestia. So it's going to be a big battle, and I think a very interesting thing to watch over the coming years. But I think blob space is where your attention needs to be, and blob space / DA needs to be where your attention is, and less about execution fees. So just an interesting new concept that we wanted to share here. And I think it's part why we're bullish on Ethereum is because of this DA, and then also why we're very bullish on Celestia, because they might become the leader in this space as well.
And let me just wrap it up by saying that some people uh, see DA as a community. So like, you will be just competing on price, and that's not true. Like, and the reason why it's not true is because you need to use Ethereum DA in order to have access to all that liquidity and user base. So, and probably like Ethereum and Celestia, they will have the biggest like ecosystems out there. So like, yes, you can use DA of someone else, or you can use Amazon Web Services or whatever, but then you don't have all these benefits, and you cannot tap into all the user base that exists there. And so it's not commodity.
Here's a question that comes from this. What does this mean for all the general purpose L1s? We've talked about before how the general purpose L2s, only a few are going to survive. And if you are not unique and specific, like immutable, for example, for gaming, or whatever, like you're probably not going to compete with the base or if you don't have your own community. If you have your own existing community already, like Base, Coinbase, and Kraken, you can launch a general purpose one and like let your community build and develop a cool ecosystem. But if you're starting from scratch, you don't really stand a chance anymore, because you have Optimism and Arbitrum, which are already huge in general purpose. And so like moving forward, it's like you need a unique, very specific use case for your chain. Now, that seems pretty obvious in the L2 world. Where it doesn't seem obvious yet is the amount of L1s that are out there. And look at how many new ones we've had just recently. There's Sui and there's Aptos. Those are not even that new anymore, but now you have like Monad and Mega ETH and Bear Chain and blah, 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 blah. The list goes on and on and on. I don't know what happens to those moving forward in a world where everyone can just launch on Ethereum or Solana, where there's already, or Base, where there's already users, already momentum. Test your app; it works. Okay, now I launch my own chain as an L2 or my own L1. But again, app specific. I don't know that there's going to be a need for a lot of these general purpose L1s. And so, kind of like I think it was a couple weeks ago, we said, hey, maybe everyone's over allocated to L1s. This sort of actually fits that even more, and I think kind of furthers that thesis that like a lot of these L1s are just not going to make it. There's just no way. I can't see there being a lot of these integrated L1s, or we call them integrated or monolithic L1s anymore. I think that value is all going to move to the apps, and apps that probably also have their own chains, app specific chains. I think probably you're thinking the same thing, Martin, or what do you think?
Yes, I agree. I was just about to say that, remember, like, don't forget that Solana is also integrated chain, and like, everyone is super bullish on Solana, and now we are saying like, hey, what about all these like integrated chains are gonna do in like 3-5 years? Like, who is gonna use them? So but yeah, I pretty much agree. I'm not sure, and my guess is they will find their own niche, and like maybe
Right.
Aptos will be just, I don't know, focused on gaming, and you know bring some superior user experience for gamers or something like that. I don't know, but like, be generalized layer one, it's not gonna work. Like,
Yeah.
I would put, yeah.
I'm trying to find the chart, but I can't seem to find it at the moment. But um, even in January, we had was the first month that the revenue that was generated from L1s was surpassed by the revenue that was generated from apps on chain. That was the first time in history that's ever happened. And so we're already starting to see this play out. just from that. And that's not even counting most of these apps are going to move to their own chains and generate revenue both from their service, right, that they currently do, and from execution. And so it's going to get very the water's going to get muddied. What's the sentence I'm trying to say there? I don't even know. Anyway.
Muddy.
Muddy? Yeah, muddy. Okay, let's do that. And so like we're already starting to see that too. So I think that's also quite interesting. Yeah, I
Can,
think
can I can I ask a
yeah,
couple more questions?
yeah, sure.
Um, so two questions I have. One is I want to know what the investment thesis is or the investment opportunity here is, because we're talking about Ethereum and Celestia. Is it only Ethereum and Celestia, or is there anyone else? And like how to play out that investment thesis? But my other question is, so if we're looking at that chart which shows who provides all the DA, and it's only Ethereum and Celestia on that,
Yeah.
is that because 100% of the DA is provided by Ethereum and Celestia currently? Like,
There I
who's
think you just
providing
couldn't
DA for
see it.
Solana? Like,
Well, it
help
does
me
it
wrap my head
itself.
around this.
So an integrated chain, they do it themselves, right? And so they don't need that. But the problem is that's not an easy thing for everyone to do, and it's not super super scalable. There is some sort of constraints there, whereas it can be a lot more scalable if you just offload it, and it's also more decentralized to offload it as well. And so most chains coming in um, are not coming in like these app chains. They're not coming in and launching their own chain from scratch where they're going to get their own validators like Ethereum or Solana has, and they're going to do this whole new consensus mechanism. Like, that's crazy. No one is really going to do that anymore. That doesn't seem very smart anymore, because what you can do is launch your own chain, but just offload everything. It's like when you launch a website today, you used to have to build everything from scratch. You had to get your own server, put it in your house. You had to code the entire thing from scratch. You had to do it all. You had to buy your own domain. Nowadays, you buy a domain on GoDaddy, you use WordPress, you host it on Flare Cloud or whatever, and you actually do none of it. It's just all done for you stuff to make your own website. And you can use like Squarespace or WordPress where like you actually don't need to code at all, right? And just like any old person can do it. That's where we're moving into. That's kind of the world we're almost already at for blockchains. And so in a world like that, it makes no sense to ever try to do that all in house anymore because it's so expensive. It's so hard to do. And it's so complex. So it just doesn't really make sense. So I don't think you'll get that anymore. And then in terms of the DA stuff, I think EigenDA has some customers already, but it's so tiny. The revenue would be like minuscule that it doesn't even show up on that chart. I think there was an all thing selected on that chart. You just don't see anyone else. I'm sure there'll be more competition here. But it's kind of like blockchains where like, okay, Bitcoin, Ethereum, were way ahead, and so like they were able to dominate first mover advantage. It's the same thing here with Ethereum, but then more Celestia, because Celestia is kind of like the I'm going to build DA from first principles. It's kind of like what Solana did to Ethereum in terms of execution. They're like, hey, okay, we know blockchains are a thing, but I'm going to build and I'm going to optimize for execution from first principles, right? If you were to rebuild a blockchain today, you wouldn't build it like Ethereum. If you were focused on execution, you would build it like Solana, right? Which is more similar like what Sui and Aptos and all these guys have recreated. And so they built it from first principles, and that worked. And Celestia is basically doing the same thing now with DA, saying, hey, let's rebuild DA, but from first principles. And that's why it's 1,000 times cheaper than Ethereum, right? And so really the only two games in the space is Ethereum or Celestia. And I think our thesis here in terms of investing is, well, most people have exposure to Ethereum. And so you have exposure to this modular world we're talking about, right? But you only have exposure to Ethereum. Do you also have exposure to the other main competitor? And when you think about execution, right? Most people are like, buy some ETH, buy some SOL. That's your like diversified play on execution, the big players. And now we're saying, well, we think the big thing is blob space, or DA, and yet everyone's underexposed to Celestia, right? Which is the only other legit competitor to Ethereum. So we're not saying like don't hold Ethereum and only hold Celestia, but you should have some sort of share of both, right?
Right. Right.
Um,
The part that feels difficult is the timing of that inflection point,
yeah.
because Martin, you said that inflection point comes this summer for Celestia, but that's just for Celestia. That doesn't mean it comes for all the other players.
But like, Superchain is also bringing interop this year, I believe, at the end of the
Yeah.
year. So like it's already like small pieces. There will be, Elastic kind of cluster, Superchain, Arbitrum, whatever. So they will probably be able to interconnect this year, or like maybe, I don't know, soon or next year. So it's like first signs, and then we only need to like make sure that the interconnection between those clusters.
And if you want to talk inflection point, like we're already at a point where there's every week there's a new L2 or an L1 that's like a subnet on Avalanche, or an L1 that's part of Cosmos or whatever, basically launching. There's multiple ones every single week now. And we just got the green light from the what's it called, the OCC or whatever, for banks and financial institutions in the US
Mm.
to start doing crypto activities. And obviously, Trump administration removing and improving a lot of regulations and things. Now we're going to start to see the likes of the Robinhoods and Stripe and all these other banks, et cetera, starting to build on chain. And I think what we think is that's going to be done through either an L2 or an L1, doesn't matter, but they're going to need a place to use DA, and that's going to be either Ethereum or it's going to be Celestia. And so I think we don't have that inflection point fully yet, but like it's already really starting to ramp up, in my opinion. I think that's only going to get more and more and more throughout this year.
Yes, and like the timing thing is it's tricky because when it going to kind of price in the markets? Like 2021, like all layer ones were pretty much going nuts and outperforming everything. And it was just because market was like, wow, that's really a good technology. We have DeFi, so we will need a ton of block space. So like, Ethereum was, I don't know, I don't remember the market cap, but like pretty much everything went just nuts. And my point here is like when everyone sees like DA being the thing, the next thing, it's going to be late and everything will be already priced in. So maybe like be rather sooner in the market and saying like, okay, this is the future, and you can sleep calmly, don't worry, like eventually it will be repriced. Or because then the next approach is like, okay, but I'm gonna wait because no one is really talking about DA today, and it's still not the thing. But Solana, Monad, and like everyone keeps talking about these layer ones. But like that's where the opportunity lies, when you are kind of seeing the future, but not everyone is still on that boat. But all these arguments, and when
Mhm.
when you see it, when you
And
look at base and
So
Unichain
long
and
as you're patient, so long as you're patient,
yeah,
right? That's the thing
yes,
about this thesis is you really
well,
need to understand the timelines of it
and
because
the moment
this is
there's
not
inklings
immediate.
that this is going to be the truth, these assets are going to go through the roof, right? Because everyone's going to be,
yeah.
oh, I see it now. DA is the thing, right? And I think we are still fairly early in that. And if you look at the Celestia chart, it's quite interesting. Like this went through the roof, right? It launched, what was it, November 3rd, 2023. It did a big airdrop at around $2 and 50 cents, and then it skyrocketed all the way to $20. Okay, now that didn't happen because everyone thought data availability was the next block space. Not in 2023. That happened because they did this thing where like if you stake your tokens, you'll earn other airdrops. And so what happened was retail came in and bought all the bags, and unfortunately, all the VCs then started unlocking, and they could dump, and retail got completely wrecked. So one of the other nice things about this investment is everyone hates TIA right now because they all retail got wrecked on it, right? That was the unloading of it here. Everyone was like, okay, these airdrops aren't actually that good. And everyone just started selling, selling, selling. And a bunch of people are holding bags that they were buying up at like $20, right? To stake, which was just a terrible idea. We were screaming that on the podcast. We weren't Milk Road at the time, I don't think, but I remember I was screaming that, like, guys, this is a terrible idea. Do not buy this stuff. Do not invest in it, whatever. But now look at, we've come down, we've based out for almost a year at this like $4 mark. And we're even below it, obviously, because we've had everything's dumped. So we're back at almost the price of when they airdropped. And so, it's a $1.5 billion valuation market cap. So still overvalued in terms of the revenue it's making, but for the potential of what this can be, like there is a really good opportunity in this token right now, we believe. And so anyway, that's why we're sort of building up this thesis.
And to be fair, like at some point I was also bearish on Celestia, and like when
Yeah.
they were priced, much higher than
Right.
today, and DA wasn't really a thing, and I didn't really see the bigger picture. But then there was DEFCON, and like many people on that conference were talking about DA. Justin Drake keeps talking about DA. It's pretty much the ultimate endgame for Ethereum. And then it makes me rethink the whole thesis about DA and what Celestia is bringing. And then they announced laser bridging, which is like connecting like all the chains there together. So DA is not community thing. It gets me interested again, and then I went to learn about Celestia and all this kind of DA future.
This is a complex topic, but I think and it's still not discussed a ton. You're starting to see Blockworks and Bankless guys starting to talk about it as well now. I think this is going to become a massive narrative and a really big thing. It probably starts this year. It might take longer, but I got a feeling it actually starts this year because we're already starting to see it. And so I know we've spent 40 minutes on this, but I actually think this is extremely important. So if you made it so far into this episode, like congrats to you, because I think this is going to be a really big deal. So anyway, let's pay attention to that. Okay, we don't have a ton of time left. What should we talk about here? You want to talk about Aave, or should we talk about blockchain or apps generating revenue right now? What do you guys want to do?
Do Aave.
Let's do Aave. Okay. So for those that don't know, 2 weeks ago or so, Aave announced that they were going to do a buyback program. And essentially what they're doing is they're going to be able to buy back their token, similar to like what we've talked about a ton here with Sky and Maker, what they're doing. Aave, obviously one of the top, let me just pull up this top revenue generating apps in crypto. I actually have a chart up here. Sky is number one. This is 30-day revenue, by the way. Sky has 26 million. Pancake Swap at 24 million. It's mainly over on BNB, which is wild. Athena at 21 million. Airdrome at 18, and then Aave kind of drops off a bit here after those top four. But Aave at 8.67 million. So pretty good. They have been just fundamentally strong protocol for years. They've been doing it where they're generating revenue for many, many years. And that has increased a lot over the last, let's call it like year or so. So they are now at a point where they've got enough profit that they can start to buy back their token. And so does it go live, or was that just a proposal, Martin?
It's not live yet, I believe.
It's
Just
not live yet,
proposal.
but it's coming. As a result, token did quite well during the times when everyone else, every major token and every token really was dropping and falling off a cliff. Obviously, it's still on a downward trend like every other token, but it's held up fairly strong during that time. And so, yeah, what are your takes? I know they're doing more. They're doing something a little bit different than how like Sky's doing it. What are your takes here, Martin, on this token buybacks and what Aave's doing?
Yeah, I think they will do 1 million buybacks per week. So
$1
you
million.
know, but the $1 million, yeah, sorry.
Yeah.
But the absolute value is not as like, yeah, like huge buying pressure is obviously good for price, but the signal is more important. Like, hey guys, we are profitable and we are using some of that cash to buy back our token.
Right.
But I'm happy that they are not using like all their profits, and like it still needs to make sense, because like maybe at some point they might find another opportunity how to scale their business, and they might need cash to I don't know, buy new technology or something else, you know. So it's always kind of wise to not be crazy about how much those buybacks are. That's the first thing. And the other thing is they don't only announce the buybacks, but they also announce kind of changing their whole um, business model. Because now when you stake on Aave, you will send your ETH or your wrapped Bitcoin or whatever to Aave, and you will get some yield because you are lending your assets. But now what you will get in return is you will get a kind of liquid version of your deposit, and you will be able to take that liquid version of your ETH or wrapped Bitcoin and kind of stake it one more time and use it as a kind of safeguard against any bug or something that might go wrong with Aave. So you will get additional yield. So it's now, you know, like if you wanna, because if anyone wants just to copy paste Aave, they could do it, and like probably all the lending markets will be pretty similar at some point. But now they are bringing this new mechanism where like everyone trusts Aave. That's why everyone's using Aave. They have like, I don't know, 30 billion in deposits, which is insane. And now like they are gonna bring even more yield. So more incentives for people to lend to Aave versus some other lending protocols, because they will give you additional yield that you are, you know, kind of restaking your assets one more time. Yes, there are some risks that you might be slashed, or like, you know, you will get deduction of your assets when there is some bug or something. But considering their history, no bugs, like strong team and everything, I guess a lot of people are gonna do it, and I think it will just create more incentives, and like the market share for Aave will just keep growing.
Yeah, I think so. The market share right now for Aave in terms of revenue from Aave versus the rest of the lending market, Aave has 44% of all the revenue, right? So it's pretty freaking dominant, which is cool to see. And then I just think this chart here I have up on the screen of just its revenue, like it's now what more than double the revenue it was making the last cycle, right? You're not seeing that a lot in this space, right? Like companies that have been around for that long that are more than double its revenue, like Ethereum's not even close, for example, right? To its revenue it had before. So that is
But
that yeah,
but but that was revenue, but like mostly bootstrapped by incentives, which were much
yeah,
higher
true.
than that revenue.
Yeah, true. So meaning um, a lot of this revenue came from paying people to use their product. Today they
Yes,
have none of that, and it's still more than double, right? And so, like again, a fundamental thing that's super bullish. Now they're using that revenue to buy back their own token. I just think, again, as more capital comes into this space, you always got to think of who's the next buyer of your asset that you're investing in, and in most altcoins right now, I'm telling you, there's nobody. The answer is nobody. If you look at one of the things I've been thinking about is like, if you look at the dot com bust from or boom and then bust back in 2000, there was hundreds, thousands of websites that were launched, and all of them had these like valuations that went just through the roof, right? Because everyone was like, well, internet's going to be the next big thing. We're going to buy all these things, and then it all crashed. And when people came back to reinvest in the internet again, they didn't invest in most of those things, like reinvest in like 99% of those projects. So pets.com, for example, which was worth billions at the time, never got a bid again. And it just literally went to zero and it went bankrupt, right? And I think a lot of the altcoins that exist in crypto today, that's what's happening. That's what last cycle, we had this huge boom, it all busted. And now everyone's waiting for people to come back and buy their token. And I just think it's not happening. No one is coming back and buying most of these tokens ever, right? And I think who will, it's one, obviously, as corporations and like institutions come back in, of course, they're going to put some capital to work, probably on the bigger assets, the major assets. But when you look at these smaller ones, it's the protocols themselves. That is your only opportunity for someone to buy your bags again. And so seeing a revenue chart like this that's growing so much, like you don't see this in a lot of protocols in crypto. And then now that they're actually launching this buyback, I just think it's such a signal as to where this is going. And I think in the future, like, look, it's only 13 million today. And we haven't, as everyone said, we haven't had that big of a bull market, right? So what happens when like we really go into a bull market, whether that's this year, or not? You have Michael Nadeau that came on the podcast on Monday that said it's not, but that's fine. Whether it's next year or the years after, these numbers are going to go through the roof. And 13 million a month is going to be tiny compared to what this will look like in, let's say, 1 year, 2 year, 3 years when it's 100 million or 200 million or 300 million and so on and so forth. And in that world, they are buying back a ridiculous, like it's 1 million per week. I think you said right now, like what happens when the revenue is 5x, 10x, then we're 10 million a week. Like that's a massive amount of dollars coming in. You're not getting that from retail. And that's automated. That's happening no matter what's going on with the price. So I just think, again, as long as you're thinking long term, these are the kind of things you got to be watching. And it's awesome to see Aave step up and start to do this. And it's not often we have a good product that's growing in revenue that's also now buying back their tokens. There's only a few of them that exist in the space.
and like we are saying, we are in bear market or whatever. Um, but like for example, Jupiter, they made the best months in February in terms of their revenue. So like it kind of feel like, okay, crypto is dying, everything's going to zero, but then you have some protocols who are making like record revenues, and the
Yeah.
prices are just going down, totally ignoring the fundamentals. It's just like once the market will start to feel more positive again and all the panic is gone and all the weak hands already sold, then we will see the repricing of the strong assets, and like all these DeFi tokens that are already doing buybacks because they are fundamentally strong. It's going to be a nice chart.
Yeah. Also, I know like we'll just wrap up here, but Jay, on the podcast that you had on Monday, we're recording this on Tuesday, by the way. I'm probably going to speak about what I'm about to say on our live recording on Wednesday, but in case I don't, I'm going to say it again here. But one of the things that Mike said regarding bear market was looking at on-chain data, and he was basically like, if you look at the volumes, the DEX volumes in Solana, it's going down a lot. And he's like, to me, that's a signal that we're going into a bear market. And I just think like right now our markets are controlled by macro. They're not controlled by what's happening on chain. And there are many ways to cherry pick data on chain to say that we're going into a bear market. There are also many ways to cherry pick data that show that, hey, we're actually going into a bull market, right? Like right here, if you can look, I have some charts up on the screen of like, here's the supply of stable coins. It's going up and up and up, all-time highs every single day. Here's the volume of stablecoins. So not just there's supply of people holding them, but people actually using them and trading them or moving them around and sending them. The transaction volume, it's at all-time highs. Like what bear market, right? And I think that's a massive, massive piece of the puzzle that I think people are missing when they look at meme coin trading on Solana, right? You look at RWAs, the thing is going absolutely parabolic right now. I see no reason why that stops. What does that mean? There's going to be more trading on chain the more that continues to go, right? More fees, more revenue, et cetera. Even if you look at overall volumes, it's not that bad. Like, yes, we had that crazy like 2 weeks where it was out of control because of the Trump token. But otherwise, if you look at it, like we're way higher than we were last year. So like, I don't know. I don't see a full bear market there in terms of on-chain data. And then things like the other things I think people miss a lot is there are other things than just trading meme coins, right? And if we look at like this is DPIN devices, so the amount of people interacting with DPIN projects, we're at 21.5 million, and that just goes up and up and up every single day, right? So there's a lot of other pieces of data that show you that, hey, actually things are still going up and up and up, and it's not actually showing bear market in the on-chain data. And so yeah, to me, at least on chain, I don't see bear market. You have to listen to my episode on that came out on Wednesday for my thoughts on kind of the macro and the political side of things. But just wanted to share that as I think there's still going to be a lot of on chain activity going on here. And even when a bear market comes, like I'm not sure that first chart of stablecoins ever goes back down. I don't know if we talked about this in an episode before. I think we did last week. Like I think through the bear market, whenever that comes, and again, I think that's 2026, the supply of stablecoins just continues to go up. And the volumes of stablecoins, transacting stablecoins continues to go up, which probably makes me believe that we don't have a crazy bear market like we had back in the day. I think that the metrics we're looking at are all changing, and we need to rethink how we're looking at this industry, both in terms of like, okay, stable coins, right? That's not going to be impacted by bear market. If anything, it might be accelerated. Also, in terms of what we talked about at the beginning of this episode, instead of looking at blockchains and these integrated chains, you got to start looking at data availability. Like, I think we're going through this really big change in this space. And it's a tough, if you look at all the metrics, the data from last cycle, you're behind because the space is changing too much. So anyway, there's just a few of those things I think that we're noticing here. So let's leave it there. Unless anyone else has anything else they want to say, but I think that was a great episode.
Yeah, what I want to just say, like back in the previous cycle, the use of stablecoins were pretty much for just, I don't know, kind of having a way to buy NFTs or whatever for speculation. Like, but now the market structure is totally different, and like the users of stablecoins, yes, there are still people using it for speculations or whatever, but then there are also like Visa, Stripe now talking about stablecoins too. Bank of America is talking about launching their own stablecoin. So it's like we don't really need, we won't need people to do crazy stuff on chain just to generate stablecoins volumes and stablecoins supply growing, because it will be all done by all these companies who are just using stablecoins on the back end. And you might still be using your favorite, apps, and you just don't know that you are using stablecoins, but you are. Like, if you also listen the CEO of Robinhood, he's just talking like, hey, we use stablecoins all the time because like it's just much better products than what would need to do otherwise without using them. So it's just like people are ignoring those things, but like the more we are able to provide the blockchain abstraction and all that UX away, then the better. So it's
Yeah.
just really about the adoption of all these apps.
Cool. Well, Jay, I'll let you wrap it up.
Yeah, great episode. Thanks, gents. Really appreciate the thesis and the layout. It's going to be I think it's important to zoom out right now and to not get too caught up in the week to week, the day to day, because trying to predict the short term is very, very difficult right now. But the long term is much more predictable, as you guys laid out so well in this episode. Thanks so much for tuning in today, my friends. If you're still listening, shout out, high five, love you, appreciate your time as always. I would love to meet you in person. If you guys want to meet me in person, you're going to want to come to Consensus in Toronto, May 14th to 16th. We got a discount for you guys to get $350 off your ticket. Hit the link in the show notes. I'm going to be there speaking on stage, interviewing a bunch of people. We're going to have a Milk Road meetup. Would love to meet you. Would love to hang out with you. So hopefully we'll see you there. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your #1 resource to help you invest successfully in crypto. One final note, this show is for educational purposes only and nothing we say is financial advice. Investing in crypto or any asset is risky and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.